All right, welcome to day 9 of the Path to Profitability series. In this video, we are going to cover risk management, okay? So this is going to be the last concept I'm going to cover before we put together everything we learned about the components of the strategy into a finalized version of the strategy and apply to the charts and show you guys how I apply to the charts. So we need to make sure we cover risk management before that, because that's also one of the key factors. It's not really strategy related technical analysis, but it's a very key component because you need to understand this in order to trade almost any strategy. So we have to cover this before we go over the entire strategy. Unfortunately, you guys are going to have to wait for the next video to watch me put together the entire strategy, but this is also a very crucial component. I highly recommend you guys don't just skip through the videos or skip through the series. Watch it from the beginning to the end. Do not skip random few minutes here and there because you get lazy. You want to get to the dopamine part where I teach you, okay guys, this is exactly how you're going to get rich quick. No, but just sit, stay patient, and combine all the components that I'm teaching you, because if you do that, that's the quickest way you'll be able to get rich, if anything, not by just jumping through the entire series and all that stuff. So we are on the charts today, because I'm going to be explaining risk management. What am I going to be talking about in terms of risk management? We're going to be covering, let me see what I mainly put my main points down for. So for this specific video, we're going to mainly be covering all about trading with your, also leveraging this tool specifically is going to be for the most part, understanding stop loss placement, take profit placement, position sizing, how much you're going to enter and exit with, how much of your account to risk on each trade, a little bit on how to handle losses and whatnot. And a little bit more of what I can remember as we go, because I don't have everything fully written down. I just have a general guide for this Path to Profitability series, but for the most part, I'm going based off what I think is important as I'm continuing to say the information. So it's kind of like going with the flow of things. So the first thing I want to cover about risk management is, if you guys are using the TradingView charting software, your best friend is going to be the long position and short position tool. These two tools, they're going to be your best friend. Why? Because they help you see where your stop loss is and your take profit is. And if you guys don't know what a stop loss and a take profit are, what either of those are, basically, a stop loss is a predefined level that you're willing to cut your trade. You're going to cut your trade at to limit your losses, right? A stop loss is going to stop you from losing more. I guess that's how you could view it. Stop loss is going to stop your losses. Take profit is the same thing, a predefined level where you're going to exit your trade, but for a profit, to secure in your profits. Okay, that's all it is. They're both a type of order, a stop loss order, a exit, take profit order, whatever you want to call it. Generally, you call it a stop loss for one that you want to lose, limit your losses, and take profit for the one where you want to secure your profits. Okay. So, and this long position tool, if we take it out right here, actually, let me move it over here. So, if we have a chart like this, an uptrend like this, let's say we get in right here. Okay, and it goes up. We have a long position tool. We are going to put our long position tool at the entry point, right? We're going to execute it at an entry point. Let's say we put it like this. Okay, I don't know why I'm saying that. It should be 1-to-1 usually. Stick to. It's gonna plop down like a 1-to-1. You're gonna have to adjust your stop loss. Okay. So our stop loss depends. We're going to put this at a predefined level. Let's say, for example, we want to put it below this low, this pivot, right? This low. We're going to drag this and put it down here. And I'll go over everything about what these numbers mean and whatnot. But visually, because we're going to place our stop losses visually, right? You can also place it based off of points and all that, but we'll cover that later. For now, let's imagine we're placing our stop loss at a predefined price level visually on the chart. For example, below a certain price low or a trend low, swing low. So our stop loss goes there, and let's say our take profit is at the previous high right here. Okay, let's say this is our what's it called? Our trade. We got in right here. Our take profit is up here, and our stop loss is down here. Now, once we get into this trade, we're gonna wait for price to. Oh no, this is part of it. We're gonna wait for price to either hit the take profit or the stop loss, right? We're not doing anything about the trade until it hits either the stop loss or the take profit. That's why it's really important, especially when you're starting off. You would benefit a lot if you use some sort of stop loss order or a take profit order, because that gets rid of all the mental side of trading. Well, I'm not even in the middle of the camera real quick. Let me just adjust. That will get rid of all the mental stress, because you are now not in control of your trade. You have your orders there, and whatever happens to the trade, happens to the trade. You already put your plan down. You already set your rules down of what you need to do in terms of whether going in your profit, or for you, or in drawdown for you. You already have your plan out for that. All you do is sit back, relax, and watch the trade do its thing, right? No need to stress and like change up your plan last minute. Okay, that kind of goes into the next topic I want to cover, which is always trading with your plan. Okay, every time you want to get into your trade, you want to enter your trade with a plan in mind. Ideally, you want to have it written down, but that will help a lot more, especially if you're beginner or intermediate. But if you're past that point and you think you're confident enough that you know your plan memorized, like from the beginning of market open all the way throughout the end of your trading session, you remember it to the T, then you don't have to write it down. But you should always enter your trading day and your trades with a plan, knowing what are you looking for on the day, what is your thought process, what is your observation on the current market environment, and what is your plan in terms of what trades you're looking for. For example, if you go into the day, I'll give an example of what mine might look like. Okay, we're going to the day, the pre-market. Let's say it's like 15 minutes into pre-market, or like anywhere from market open to 15 minutes into pre-market, right before market open. So let's say market is we're at that time, and I'm looking at pre-market. I'm like, okay, we have a pretty decent uptrend. Okay, the 200 SMA is sloping upwards. Let's say this is the 200 SMA is sloping upwards. Say it's like this, is sloping upwards. A trend is picking up. We are also forming higher highs and higher lows on the 30-second time frame, which is a time frame that I trade. We haven't. I'm looking for price to continue forming higher highs and higher lows for as long as we're above the 200 SMA and we are holding, and it's sloping up. And I don't want price to come break below this low, for example, because if that's the case, then I might be a little hesitant to take some longs, because we might fall below the 200 SMA and we might be preparing ourselves for a downtrend. So when this happens, I'm going to be a little hesitant to take some longs, but for as long as we get a nice pullback like this, get a nice momentum candle over here, maybe if it's not clear enough, we might wait for another clear, strong leg up, and then a healthier, cleaner pullback. And then wait for a momentum candle to enter off of, then I'm going to hop in and take my trades. But for now, we're going to wait. This is our plan. We're going to be biased towards long, of course, because we're having an uptrend. We're in an uptrend with higher highs and higher lows, 200 SMA sloping upwards. And that's my main confirmation for wanting to have a bullish bias on the day. So that's going to be an example of a plan I have for a market session. Right? And if it's too confusing, for example, if it's flat like this, I'm going to be like, oh, maybe I need to wait for it to play out. We'll understand previous price action. Okay, we are having a short-term uptrend in the previous price action right before market open. And then I want to see us hold this. For example, let's say we are over here. I want to be like, okay, I want to see us hold this pattern of an uptrend along with the 200 SMA continuing this, sloping upwards, and then I'll be biased towards long. This was actually recent. This was Thursday, January 16. So I want this to happen. 200 SMA to go up like that. I want us to break this high and then get a pullback. When we get this pullback, I'm going to be extremely confident. If it's a healthy pullback as well, I'm going to be extremely confident to take a long position when we either get a order block and fair value gap play, which I'll cover in the next videos. That's my other strategy, right? So don't worry. That's just, if you guys don't understand that concept, don't worry. We'll just stick to actually momentum strategy for now. So I'm going to wait to see momentum, okay? When we see a pullback and then we see some momentum, and then I'm going to take a look for a position to ride the next leg up, okay? But if we don't get that, but if we do get this is what I'm going to be looking for, an entry around here. As long as the 200 SMA sloping like this, we are holding above the 200 SMA. We break this high, okay? And we don't come down and break past this low like this, right? I want to see signs that we're holding a clear uptrend. All right. Now, if we do something like this, where we just come back down and we fall below the 200 SMA, then I'm going to be more hesitant to take some longs, and I'm not going to be as biased to the upside, because the 200 SMA will probably flatten out even more compared to how it is looking right now. It might do something like this, okay? And if we break below and maintain below it, then I'll look for shorts. But if we break below and then try to and then consolidate a little bit and then break back above and then consolidate and come back and we're just hesitating and the MA line is like this, no trades for the day, right? I have different outlooks based on what the market will look like, and that's all part of my plan. Like, I don't have a written plan anymore. I sometimes explain it in the Discord and I go over it a little bit in the live calls because it's really important. It will help some people. It helps some people who are learning the strategy. But for me personally, I don't need to write out the plan because I already know it in my brain based on what the market environment is looking like, and what the recent price action is looking like because I've been doing it for so long. It's literally just engraved in my brain. But it will be very beneficial to a lot of you guys to have your plan written down before you're going into market open. This is all part of risk management. Because if you don't have a plan going into market open, what your performance might look like is you'll have a general idea of what you're looking for going to market open. And then once you see something not following what your general plan was, you'll kind of switch up what your plan is to try to fit the current market narrative. And then based on that, you'll try to force a trade when the conditions aren't ideal. And then you'll probably lose a few trades and you'll wonder why you lost. And then you look back, you're like, oh, this wasn't even my plan. And I realized there was no A+ clear setup here, but I ended up taking some trades. Or you might take some trades, but then realize it's not going as well. And you might lose your trades and whatnot, and then continue over trading and then trying to get back your money because you think it looks ideal, but it doesn't, all that stuff. You know, that can all happen when you don't have a plan coming into market open and following that to the T. Okay? Having that plan keeps your original thought in place so you can follow what your original thought was. And then after the day, you can go back and see, was my original plan good? What could have been tweaked for the day? What did I miss out? What could I have seen differently? But you shouldn't really tweak it when you're trading in your market session unless it's completely obvious and it should have been part of your plan. But for the most part, keep your original plan the same, right? One of my favorite quotes is plan your trade and trade your plan. Okay, very simply put, it's in the quote itself, always have a plan and trade what your plan says you're supposed to do. Okay, that helps keep everything organized and keep everything simple. Okay, along with that, what did I want to cover? Along with having a plan, you should also have one thing I implement myself, which I honestly haven't had to worry too much about, is having a max loss and a max number of trades, or a max number of trades. But before that, I want to cover one more topic that will lead us into that and help us better explain that part of the risk management, which is always risking a small percentage of your account for every trade. Right, if you guys have been into trading for at least a little bit, I'm sure you've heard of the term risk management and how you should risk a very small percentage of your account on every single trade. And if you haven't, that's totally fine. This is exactly why I made this guide, so you guys can understand these topics and learn exactly from what I'm saying from all my years and years of experience. Okay. Risk management, specifically risking a small percentage of your account per trade, is very, very important because that minimizes your risk of ruining account and going emotional and worrying about money and getting greedy and all emotion related things, right? When you're risking a small percentage, you're maintaining consistency, because when you're consistently risking a small percentage, you're maintaining consistency in your trades, in your mindset, because you're making the gains minimal, but they can compound if a strategy works and you're getting trading down, right? So you don't need to be risking a crazy amount to be able to make money consistently, right? You need to risk a small amount, and then what you can change is the amount of capital you're trading with. If you can increase the amount of capital you're trading with, then you'll see more and more returns instead of increasing the amount of risk you're trading or amount of risk you're putting on. Because the more risk you're putting on, the higher chances you're going to get emotional, you're going to get greedy, you're going to want to take out your money from your trades, and you're not going to follow your plan, because the money becomes more of a factor when you have more money on the line. Okay? So, a key rule I have is whatever account size you're trading, always trade between 0.5% to 2% of the account, 2 to 3% of the account size. Ideally, as someone who's recently new getting into the market, or around beginner to intermediate trading experience, I would recommend risking anywhere from 0.5 to 1.5% of your account size per trade. For example, if you have a 50K account, I would recommend, and you're relatively a beginner, I would recommend going on the lower end of that. So risking anywhere from 0.5 to 1% of your account per trade, which would be, if we do the math, 50K, 1% is going to be $500. 0.5% is going to be $250. So every single trade, by risk, I mean the amount you're going to lose on your trade. For example, if the trade, let's say we enter right here, the amount we're willing to lose, meaning the amount we're willing to lose if price goes to this level right here, our stop loss, which is all the way where this dark zone ended, is going to be $250 if we lose this trade. Okay, nothing more, nothing less. And we determine that by our contract sizing and how much we enter with. Okay, so that mainly covers stop loss. What else did I want to cover? Let me think. Yeah, so risking a small percentage of your account per trade, very important, right? We don't want to risk over $500, especially if you're relatively a beginner. And try not to aim for a crazy number of trades every single day. For example, I like to recommend all my students, and honestly myself as well, to trade anywhere from an average of 1 to like 3 to 4 trades a day at the most. Okay, sometimes you'll see me crossing that line a little bit, just a very tiny bit, but very, very rarely I'll do that. And sometimes you see me catching 0 trades for the day. But on average, you'll see me catching anywhere from 1 to 3, 4 trades a day. And the reason that is because A+ opportunities don't always present themselves, right? The more trades you take, the more risk you put on, you're most likely not taking all your A+ trades, and you're taking some B setups, some C+ setups, C- setups, and sometimes even F setups. Okay, and A+ setups don't always present themselves every single day. That's why you need to keep your trading to a minimum. Along with that, you don't need to be trading more than 3-4 trades a day. Not only do your A+ setups not present themselves after like a few trades, but you also tend to get emotional and overtrade and convince yourself that you're taking a good setup when you're really not, when you're taking more than 3-4 trades a day. Like I've experienced this myself. I've seen many people also experience this themselves. They tend to go on, like after they hit a limit, after they hit a max of like 10 trades, they start to break that barrier and go even further and take 20, 30, 40, 50 trades, and they end up blowing their account and losing much, much more than they want to, and just going on tilt completely. When you restrict yourself to a maximum number of trades every single day, or a maximum loss in terms of money, a dollar amount, that can do so much for you, because you can put a threshold for yourself for when you notice you're going on tilt. And then when you notice, let's say you pass $400 in max loss, or in $400 in losses, you tend to go on tilt. You tend to blow up. You tend to want to overtrade. You tend to get emotional. Maybe not all the time, but most of the time you do. So setting that max loss might benefit you, because instead of losing, going from negative $400 to negative $1,200, you just stop when you're at negative $400 on the day and you're done trading. Okay, or if you're at negative 800, whatever number. I'm just giving you guys an example number, but find the number that works best for you through tracking, and we'll cover all that tracking stuff later in the next coming videos, which is going to be about journaling. That'll cover everything you need to know about tracking your trades, journaling, documenting, reflecting, all that good stuff. So we'll worry about that for later, but for the most part, just understand the concept that having a max number of trades or a max dollar amount loss will significantly help with preventing going on tilt, emotional destruction, just gambling and taking trades that you're not supposed to, and just help your overall trading performance, because that's the end goal, maximizing your trading performance. Okay, and same goes for the max number of losses. You can also do that by tracking your performance and seeing, okay, when I take over X amount of trades, I end up taking a lot more trades and my performance goes down the drain. I always end up having a red day and taking more losers whenever I take over 4 trades, for example. But ideally, I would say stick to anywhere from 1 to 3 trades. Like that would be the range that I would recommend everyone to stay between. Like don't go over that. The less the better when you're a beginner, because you want to focus on taking only A+ setups and not just gambling, because when you go gamble, you go on tilt like crazy. So stick to like 1 to 2 trades a day, take the A+ opportunities, make sure you have a plan coming into the market. And along with that, we also need to know how much to enter our trades with, right? That's another big concept, because futures contract pricing can be a little confusing to some people. I know I covered that a little bit in the getting started with futures video about how point system works on futures. And you guys, if you haven't seen that video, it explains thoroughly what futures is, how it works, how the point system works, a little bit about the contract sizing. But this video, we're going to show how that applies on the charts. If you use TradingView, this will be a big benefit for you guys, since if you guys know how much you want to risk in terms of dollar amount or in terms of percentage, you can know that straight using the long or short tool right here. Let's say I want to enter this trade on this candle close, okay? On this candle close. This green candle close, and my stop loss is around here. Let's say my stop loss is... Let's say my stop loss right here. Okay. My stop loss is right here. Okay, why did that just get deleted? My take profit's up here. My take profit doesn't matter. We didn't get hit in this example, but okay, let's say in this, by the time price hits the stop loss, I want to only have lost $400 on this trade, right? I don't want to lose anything more, anything less. I'm willing to risk $400 on this trade to potentially make this much, X amount of dollars. Okay, that's going to be $1,150. Okay, or you can do $400 multiplied by your risk to reward ratio. Let's make it clean 1 to 3 so it's perfect. Okay, I have this long tool configured so it automatically tells me the how much I have to enter with, but I'll explain all this stuff, all what this means right now. So when you double click on this, or you can click on this and click the settings icon, it's going to show you, it's going to probably go to style first. Make sure you click on inputs. Okay, always show stats. I don't know what that does. That's pretty cool. But inputs, go to inputs tab, and that'll cover all the stuff you need to know right now. So make sure your account size is set to the account size that you're trading with. I set it to 50K because I typically trade with 50K accounts. Lot size, leave that on 1. Also, you can change this currency if you want to, if you trade different currency, but I keep it on default, which is USD. Risk, you can choose this risk either in USD or percentage. This just means the amount of money you're willing to lose on this trade if it goes against you. So I'm willing to lose max $400 on this trade if this trade goes against me. My risk to reward ratio over here is 3. This means the size of my potential reward is 3 times the size of my potential risk, right? My risk is 1 and my reward is 3. That's all it means. And my risk reward ratio should be 1 to 3, but they just mentioned the reward ratio as if your risk was 1 unit. Okay. So your reward for every 1 unit of risk. So in this case, we have a 3x reward. So if we're risking $400 on this trade, if it goes in our profit and hits all the way to our take profit level, we're going to make $1,200, right? So if we lose right here in the amount, it says amount 49,600. That's how much you're going to lose if it goes down here. And the amount you're going to make if it goes to your take profit, 51,200. So this one, you're losing 400. Here, you're making 1,200, 3x. All right. And ticks, this stuff is automatically ticks and price. This is automatically calculated based on where you drag this to. Like if we drag this up and down, it'll change over here as well. But all it is the profit level and stop level. The stop loss level right here, which is the bottom one, 80 ticks away. Take profit level is 240 ticks away, right? And if you guys remember, every point on the futures market, or on NQ specifically, has 4 ticks for every point. So 240 ticks would equal, it tells you right here as well, by the way. That's what these numbers are over here. This 60 means your take profit distance from your entry to your take profit is 60 points. Okay, it's going to be 0.28% of the NQ, and this is going to equal to 240 ticks. If you do 60 times 4, that's going to be 240 ticks, right? But if you want to calculate yourself, let's say you're not using TradingView, by the way, this is your stop loss as well, 20 ticks stop loss, a 20-point stop loss, 80 ticks, whatever. So now you kind of get what these mean, okay? Before I tell you how you're gonna explain how you can use this to calculate your position size on another platform, let me explain what the position size is on this one right now. So if you look over here, quantity, this is the amount of contracts you're gonna enter with on the NQ if you want to take this exact trade with risking $400 on the stop loss with this amount of gain. Okay, you're gonna have to enter with 1 NQ contract, right? right? There is a way to verify if this is correct. The way you can verify it is you get the number you're going to risk. For example, let's say you're risking $400 on this trade. You want to, let's say you enter this trade, you want to risk $400. You divide this by the number of points, the number of dollars per point that the specific symbol you're trading make gains or loses for every point, basically. So on the NQ, it's going to be 20. So we're going to do this divided by 20 because the NQ gains or loses $20 for every point. Okay, and we're going to divide this by the number of points our stop loss is. So in this case, what is it? Our stop loss is 20 points. And we're going to do divide by 20 again. Okay, so you can do it like this. This is a formula for it. Risk in dollar divided by number of or dollar gain loss per point. Honestly, I wish it was a separate division symbol. Divided by stop loss in points. PTS just means points. Okay, this is kind of the formula for if you want to find your own stop loss. So you're gonna put your risk in dollar amount, divide the dollar amount gain or loss, divide that by the dollar amount gain or loss per point, which is 20, and stop loss in points, which is 20 as well on this trade, right? If this was 30, then our stop loss is bigger. We'd have to do 400 divided by 20 divided by 30. Okay, now if we do the math, this will tell us the exact quantity we need to enter our trade with in terms of how to play on NQ. So 400 divided by 20 divided by 30 will give us 0.66 and continuing indefinitely. And if you look over here, that's exactly what this quantity says. If we want to enter the NQ for this specific trade with this stop loss, risking $400 for this trade, we're going to have to enter with this much as our contract size. But you can't enter with less half contract or 0.6 contract. So what are you going to do? You're going to have to hop on the micros and enter with 6 contracts, because remember, the micros is just the NQ, but just literally the contract sizing is multiplied by 10. Okay, because your gains and loss per point, right? This is for NQ. For NQ, okay. Because for the NQ, we're making or losing $20 per point. But for the micro NQ, let's see where to do the micro NQ, we would make or lose $2 per point, right? We would lose $2 per point instead of 20. Now, this originally gave us 0.66 con size. This is contract size. This one will give us 6.6 con size, right? It's the same thing multiplied by 10. Why? Because the gain or loss per point is divided by 10. Okay, so it's opposite. So you don't have to do the math again. If you understand this concept, you can just multiply your contract size by 10 and enter that on the micro NQ. And that's what I do whenever I want to enter on the micro NQ if my position size is too small and it's less than 1 but greater than 0. Okay, use that as like a tip for yourself. Okay, this is why I like this formula, because it's really helpful to calculate how much to enter with on each trade based on the amount you're willing to lose and based on the specific instrument you're trading. For example, some of you guys might be trading ES, even though I trade NQ. I'll help you guys out for ES. For example, let's say we want to take this trade on ES. With ES, you're going to have to you're going to have to change this number from 20 or 2 to 50, because on the ES, you make or lose $50 per point. And the ES, by the way, is the S&P 500 futures. And if our stop loss was 30 points, this is going to be a really small contract sizing trade, because the ES does not move like that much for us to have. It does move a lot, but we wouldn't have a 30-point stop loss. So 400 divided by 50 divided by 30, that gives us 0.26 contract size on the MES, okay, on the ES, okay, and we don't need to, it's going to be really small, and we don't trade the ES, so we're not going to really go deep into that, But you guys kind of understand the gist of how to figure out your contract sizing based on this formula or on the TradingView chart. If you guys are using something else, you can use this formula. But if you guys are using the TradingView chart, you can simply just configure your long position tool and short position tool to based on the amount like you want to risk, amount of account size. If you change the percentage here, you can change this to whatever amount you want as well, and it will tell you let's say I want to risk 2% of my account. It's going to tell me quantities changed over here, 1.6 I got to enter with. But if I want to risk only 0.5, that's going to be 0.4 contracts on the NQ, which is times 10, 4 contracts on that micro NQ. Okay, right? Quick, and because you guys need to know this quick, right? You're getting into your trades quick. You don't have much time to keep doing a lot of calculations. You need to have this set up like quickly. Let's say I want a general rule of thumb is like, for example, let's say I want to lose on average $400 per trade. So I have this set up. So whenever I draw this tool out and I put my stop loss here, I know exactly how much I'm going to enter with. So, okay, setup's getting formed. Let's say my entry is around this area on the candle's closing. My stop loss is going to be down here. All right, let's just do this for the sake of it being like smaller. Let's say my stop loss is down here. All right, 1.5. All right. Plug in the numbers, 15 on the micros or 1 or 2, whatever I want to enter with on the NQ, done deal. Or if I put it here, okay, it's around 1. All right, I'm just going to enter with 1 contract. It's not going to be exact every time because, you know, you can't predict exactly where the candle closes, but your position sizing will be relatively similar if you enter off the candle close. Now, moving forward, right, we covered max loss, max number of trades, and max dollar amount loss per trade. Very important 2 things to implement, and I'll teach you exactly how you're going to implement them and figure that out for yourself in the coming videos. Taking a few trades per day, risk management, entering a few trades per day, how to calculate how much contract sizing to enter with. What else we got? We got to cover enter trading with a plan. We covered that as well. So risking a small percentage of your account per trade. Remember, 0.5 all the way up to like 2-3% per trade, but highly advised to stay on the lower end until you start to show some signs of success. And max loss and max dollar amount loss, we also cover that as well. So that's kind of the main things I want to cover. We covered more things than I thought we were going to cover, honestly, but yeah. And then the take profit level, remember this is just the number of points up here, right? The number of points to your take profit. And this is the amount you're going to make if it hits your take profit, and the amount you're going to lose when you're going to your stop loss. And this is your risk to reward ratio. Okay. This closed P&L, I think this is because its lot size is 1, but if I put 5, oh, that changes that. Okay, keep this at 1. Okay, don't change that. I don't know what the closed P&L is, but it looks like it's the same as the number of points for my stop loss. But whatever, that's not important. Just remember everything else. Hopefully it kind of explained what all these numbers mean. But what else do we have? Do we have anything important to cover before we finish the video? So we covered, okay, stop loss. So let me kind of tell you guys how you're going to place your stop loss and take profits in general. If you guys are normally how you should place your stop loss and take profits, because remember, this guide is not just to follow my strategy, but I'm helping you guys understand the concept so you can carry this to your guys' strategy, because not everyone will like the way I trade and the way I prefer trading, because that's just the strategy I built, the style of trading I built based on my personality and the ideal way that I would prefer to trade, right? You guys might like trading very similarly, or maybe even exactly how I trade, but some of you guys might not like how I trade, and maybe like swing trading or holding for bigger time frames or holding for trades like this where you have a crazy reward and very small risk, right? I personally say to stay away from this stuff where you have a very small risk and very high reward, because that requires a lot of emotional strength, a lot of patience, and a lot of discipline, because you need to be ready to take losses of 5 losing streaks or on average, because when you have a trade where you have a risk to reward of a 5x reward compared to your risk, just basic law of probabilities, you're going to have to wait a while to catch these trades, because you're not going to be catching these trades back to back. Just law of probabilities states that with a higher risk to reward ratio trade or strategy, you're going to have more losing streaks, but that's okay if you pair it with your win rate, right? You're not going to have a high win rate, but even with a low win rate, you're still going to be profitable because your winners are going to eat your losers, okay? For example, if I have a trade like this where I have a 5.9 risk to reward, I can lose 5 trades in a row and take one of these trades and I'll still be green. Why? Because my risk to reward ratio is so big. And the way trading works and the way the math works in this game is that you're not going to be catching trades like this every single trade, right? Or every single other trade. You're going to have losing streaks and you got to be ready for that and prepared for that. And understand, is this an error on my end or is just a part of the game? Is this just part of the valid loss that comes with my system, right? All that stuff comes with taking these trades. I keep mine consistent with a regular 1-to-1 risk to reward ratio or a 1-to-2. Sometimes you guys can even do that. Maximum 1-to-3, but I don't think anything more because 1-to-1 gives you the best consistency in your wins and losses, so you don't have to go through any emotional struggles of huge losing streaks, and having that one winner take them all out and then end up fumbling on that one winner because you got emotional because of all your losses, right? But when you have 1-to-1 risk to reward ratios, you have consistent runners, consistent trades. You're not really looking for anything crazy out of price. You're just trading, taking your piece of the pie and running for the day, right? Keeping it simple, taking money, pulling money from the market a little bit by every day. It's all you're doing, okay? And that's just my preferred style of trading. You guys might prefer to take a bigger trade. Some of you guys might not, right? It's all about finding your preference and your style of trading. All right. There's another thing I wanted to cover, and we kind of got off track about the risk to reward ratio topic about how I prefer to trade and how I recommend others to trade. But yeah, the other thing I wanted to cover is the way you would place your stop loss and take profits is your stop loss would generally go into at an area or near an area where you think invalidates your trade, right? That's mainly where the idea of a stop loss. You place it at a price where you think if price reaches this point, then the trade is just invalidated and the idea is invalidated, and the price is probably going to keep pushing down even further, not in my favor, against me. Okay, that's exactly, let's say I got in over here, my stop loss is, okay, we enter over here, price shouldn't really break this low. If price breaks this low, then it's a clear indication that we just want to keep pushing lower because it's a sign that we want to have a downtrend, right? But for as long as we are respecting this low, I'm totally okay with being in this trade. So you get in, your stop loss is down here, you're like, okay, so if my trade is correct, then we should have the next leg up. For example, we should be going all the way to these highs up here. For example, right? I'm just giving an example. Okay, and this is your risk to reward ratio, how much you should enter with if you want to lose $400 on this trade, right? Because I configured it over here. Risk $400, and this is how much I'm going to make if it goes to my take profit. Okay, my stop loss in points, my take profit in points, and all that good stuff. Now, so this trade lost, blah, blah, blah. This trade got invalidated over here. That was my idea for the trade, and done deal. Now, after I'm done trading, what I'm going to do, go back on my day, reflect, see, did I take all my trades right? Did I follow my plan? Did all my trades follow my plan? Did my mindset follow my plan? Did my emotions follow my plan? Or did I get emotional and go against it? Right? Very important questions you need to be asking, which we will cover all that stuff in the next videos where I talk about journaling, because that's going to be main concept about journaling, tracking your trades, talking about your trades, reflecting, going over all the trades you took and your plan and whatnot. That's because that's a very big part of trading as well. But this covers mainly what risk management is about. And yeah, that's pretty much everything I want to cover. If I really needed to cover another important topic, I'll make a separate video on it. But I tried to cram in anything I could think of about this specific topic about risk management. But if there really seems to be another big important topic that I need to cover, I will make a separate video on it. But there's just so much to explain. Like, you guys don't understand. 4 years of experience, there is so much that someone goes through and one learns that you can't just remember everything and combine it into one video. So if sometimes like I'm a little like trying to remember all the things I talked about or trying to add in more information, I'm just like shuffling through my brain about everything I learned about the topic to try to find something that is important and will help a lot of you guys. And it's not just like random junk information that I'm just trying to fill in, right? Because I've learned a lot of stuff over the years and I'm trying to kind of combine that all into that series and slowly just remembering everything that I learned that could help pretty much the younger version of me, the previous version of me who was stuck, unprofitable, and was still trying to learn. Okay, but that pretty much sums up this video. Risk management taken care of. It's mostly all you need to know right now. All there is applying that to the charts, to your strategy, and that's pretty much what the next video is going to be about. Applying that to the charts, applying that to your strategy, and how you're going to implement it live, real time, with your strategy, based on how you determine your stop loss, how you determine your take profit, and different ways we're going to do that, and how I do with my strategy, right, with the trend and momentum stuff. All right, I will catch you guys in the next video. Everyone take care.